Chapter 6, the Real Value Protocol, the engine of valuation. In Chapter 5, we established that Bitcoin is a digital commodity with a monetary network. Now we face the next question. What is Bitcoin actually worth? Traditional models have anchored it to speculation, mining costs, or user growth, but none captures the complete picture. The problem was not a lack of opinions. The problem was using the wrong tools. Bitcoin is not a stock valued on earnings, and it is not a traditional currency valued by a central bank. As a digital commodity with a monetary network, Bitcoin requires a model designed for its unique physics. That is why we created the Real Value Protocol, a system designed to measure both speculative energy and fundamental utility. The protocol does not produce one arbitrary price target. It calculates a logical, data-driven range, a value floor driven by raw buying energy, and a value ceiling driven by the network's underlying fundamental health. The value floor answers a simple question. Based on current buying energy alone, where should the price be? Its primary input is the raw demand ratio, combined with the established cycle bottom price and an asset-specific multiplier. The formula is value floor equals cycle bottom price multiplied by 1 plus raw demand ratio times M. When demand ratio rises, the value floor rises. When demand falls, the floor falls. This is the speculative engine of the protocol. The value ceiling answers a different question. If price perfectly reflected the network's utility and user activity, what would it be? To calculate it, we use the composite score, a health score from 0 to 100 built from normalized demand, utility, and network metrics. The value ceiling equals IUV plus the difference between maximum potential price and IUV multiplied by the composite score divided by 100. This is the fundamental engine of the protocol. The composite score blends three normalized metrics into one health score. The demand index captures buying energy. Metric A captures an asset-specific utility measure, such as transaction velocity. Metric B captures an asset-specific network measure, such as exchange outflows and accumulation. The protocol's power appeared clearly in the August 19, 2026 Bitcoin case study. Raw demand ratio reached 0.123, while on-chain health showed stronger velocity and accumulation. Those inputs produced a composite score of 91. The resulting value floor rose to $68,485, and the value ceiling expanded to $135,816. The market price of $68,264 was testing the bottom of that new healthy range. This was not a hype-based target. It was a quantitative range supported by improving network fundamentals. The price was near the lower boundary, while the full health of the network pointed to a much wider potential range. The Real Value Protocol shows that Bitcoin's value is not arbitrary. It anchors price to intrinsic utility, measures speculative energy through demand ratio, and lets network health expand or contract the justified range. This is how a digital commodity can be analyzed rather than merely described. To recap, the value floor measures speculative energy, the value ceiling measures fundamental utility, and the composite score connects network health to valuation. In Chapter 7, we examine exchange reserves and scarcity as the inventory of a digital commodity. This conversation is for educational purposes only and not financial advice. Past performance does not guarantee future results, and investing involves risk. This is an invitation to learn, not a recommendation to invest.